Hi everybody, I'm Steve McDonald and this is your Investors Daily Edge midweek market update. In focus today, government spending and its effect on the economy, restoring confidence to the private sector, dividend-paying stocks, a new low on the 10-year Treasury, and of course, the Slap in the Face Award. This segment may seem a little negative and a little gloomy, but stick with me, I do have a solution for you, it will get better. First up, government spending. Despite $760 billion stimulus package, the economy is struggling to maintain a positive curve. In fact, many analysts are having to come up with new terms to describe it without saying the dreaded double dip. Sam Zell, who most of you know as a real estate mogul, said in an interview this week the same thing I said when the stimulus package was still in Congress. It isn't what you spend, it's where you spend it. And this stimulus was spent in all the wrong places. 10% of it went to infrastructure when it was sold as an infrastructure bill. And the outcome, as a result, has been very predictable. So far, the effects on the economy have been slight at best, almost $1 trillion, and we are still barely holding our own. Which brings us to the next topic, the private sector's confidence level in this economy and this government. It's almost zero in both. Real growth, real jobs come from the private sector, and it isn't happening. In large part, I believe it's due to the businesses' lack of trust or belief in this government's direction and focus. The tax and overspend philosophy has scared business from investing in themselves and the future. Now, if you don't agree with me, think about what Sam Zell said in that interview. The current huge cash positions corporations have are not a measure of the health of these businesses. It is an indication that they will not spend it or invest it in this environment. This lack of investment is why we have no job growth and no real economic growth, and it isn't going to change until U.S. corporations see a change in Washington's direction. So, how do we as investors prosper in spite of this government logjam? I told you I had a solution. Here it is. Dividend-paying stocks. I know I sound like a broken record. Here at IDE and Sound Profits, we've been pounding the table for months talking about how important it is to have a portfolio of dividend-paying stocks. Last January, I said in an article here at IDE that if you don't have any dividends coming in, you're probably not going to make any money at all this year. One of the beauties of dividend-paying stocks that most people don't realize is that the dividends often grow or are increased. It's not unusual to see a company raise its dividend payments on a regular basis. Now, if you add up the long-term growth of dividend-paying companies and their dividends, you'll find this is where almost all of the returns of the stock market come from. Last month in Sound Profits, we did an entire issue about dividend-paying stocks. Most of my portfolio and almost all of Andy Gordon's picks have above-average dividends with no tax tricks and no magic. Just solid companies with good earnings and good cash flows. This is how you'll make money this year and for the foreseeable future. As I've said before, this is as easy as looking at the S&P 100 stocks and finding the companies in the lower end of their trading range with good dividend payouts and the earnings to pay them. That's important. The one rule is don't be piggish and go for these ridiculously high dividends. If you're seeing a company that's paying 10 and 12% when everybody else is paying 4, 5, and 6, there's got to be a reason for it, and it's never a good one. Or, even easier, try Sound Profits. I guarantee you'll find solid companies with good dividends and very good track records. It's 49 whole dollars for a whole year for some of the best stock picking in the business. By the way, one of the things Sam Zell talked about in that interview was Brazil. He is really up on Brazil. And he's one of the ultimate insiders. It might be worth a look. Take a look at Brazil. The 10-year Treasury's up next. It went below 3% on Tuesday. And this is being driven by the flight to safety after the EU crisis, but also by an investing public that doesn't know where else to go. The problem is this. When the investors see the real debt and deficit issues that are facing this country, they will fly away from Treasuries as quickly as they came in. The result will be rates that will go up a lot faster than they came down, and that'll mean a lot of people will lose a lot of money they assumed was guaranteed in Treasuries. They are only guaranteed if you hold them to maturity, so watch it. Take a look at the ETFs that play the inverse of the moves in Treasury interest rates. They're easy to play and will take off when this trend in Treasuries shifts, which trends always do. Okay, this is the Slap in the Face Award time, and this week it goes to the Securities and Exchange Commission, one of my favorites. It seems a company called Ucargo, U-K-A-R-G-O, it's on your screen, of the Ukraine, filed with the SEC to sell stock to the public. It listed no revenues, had $100 in asset, and was run by a 79-year-old massage therapist from the Ukraine, and he planned to open a string of massage parlors. I know, it gets better, believe me. Now, there have been 8 other filings with the SEC in the last 2 years, all from the Ukraine or Russia, from companies with virtually no assets, no revenues, and all 8 of the applications were approved by the SEC with no questions asked. Okay? That's not bad enough. All of these filings were done through one law firm in Seattle, which, of course, when they were questioned by the Wall Street Journal, fell back on client attorney privilege. And by the way, the SEC isn't giving many answers either. Still with me? It gets even better. After UCargo, that was the company with $100 in assets and no revenues, after it cleared the SEC, it changed its name to Windsor Park Forex. Then it was purchased by a guy named Ron Ruskowski, and he changed the name to Amaroq Resources, which says it's prospecting, not mining, prospecting for gold in Nevada. Now, by the way, as far as anyone knows, Amaroq has no gold reserves of any commercial value. But Amaroq still managed to raise $2 million in cash in private placements and then issued a 60-for-1 stock split. That means for every 1 share of stock they had, they broke it down to 60. Any idea what they're going to do with all these new shares? I'll tell you what they're going to do. They're going to sell it to folks who still believe they can get something for nothing and get rich quick. And if you buy this stuff, you deserve it. Now, the SEC's position on this is this. As long as a company accurately reports the risk of the investment in its filings, it's okay. I'm sorry, folks, but this sounds like fraud to me in just a strung-out legal quagmire. These are shell companies. That's what they are. They're shell companies, and they're out there, and they all look so promising. These are the ones that are exploring for gold. Be careful, because obviously nobody else is doing anything to stop them. We'll see you all on Friday. Thanks for being a part of us.